What's going on, apes and apettes? Welcome back to the channel. If you guys are fully invested in AMC, your portfolio is down about 6.4% currently for the day. But do not be fooled. I think we are still going to see an earnings rally, possibly next week. And I want to go over that for you guys. And as we do also know, institutional investors, they have more information than we do, so they tend to front run these trades. And what are we seeing for the day? You are seeing a positive order value of 100%. These are large option trades, and we're going to go through some of these trades, which is pretty interesting nonetheless. Even yesterday we were at 63% positive order value, so I want to talk about that and much more as far as the data is concerned, the technical analysis, give you guys the total scoop of what is going on. I also do want to do something different here in this video as well. I want to talk about Mullen Automotives because I know I've seen a lot of people talk about that. I've been in the trade for a while. Shout out to Super Show on the live stream. He called that out. I did some due diligence on it and I made the trade pretty much before anybody else did. So I do want to go over that with you guys, what I think, what my opinion is on that. So hit the like button and subscribe to the channel if you guys want to stay up to date with all of this information. And sometimes the sooner you watch these videos, the more money that you can make. So hit that notification bell. Thank you guys for doing that. For those of you guys that did just do that, as well as all of that. If you guys want to get totally free stock with Weeble, Mumu, and Public, links down below in the description. And if you guys want to come trade with us live all day, every day, link down below in the pinned comment to do so for that. So AMC down about 6%. We are seeing a recovery somewhat in the markets right now. This is the S&P 500. We pretty much sold off about 5 points from the start of the day down to the low of the day at 427.88. Now we're coming back up. Now we're at 431.27. So we're definitely seeing a lot of volatility here, and that is to be expected. Still down about 1% on the S&P, down about 1% on the NASDAQ, as well as the Dow is down over 0.5%. Oil is doing its thing, and it is up quite nicely today. We've had a lot of trades on oil. Those are hitting phenomenally, so that is looking good in that aspect. So I will watch to see. I hope AMC can recover a little bit more. We did open the day and actually went up to 1832, and then we've pretty much continued to sell down, hit that low of 1659. Seen a little bit of a bounce, but not quite the bounce that we need to see. So we'll talk about the technicals a little bit more later on into this video, but what actually happened today and what is causing this really weird day that we are seeing. So we did get the jobs report that came out. It says, here's where the jobs are in one chart. Strong hiring in the leisure and hospitality, healthcare, and business sectors helped job growth surge in February 2022. Restaurants and bars added nearly 124,000 jobs, while accommodation and lodging businesses tacked on another roughly 28,000. Transportation and warehousing and industry scrutinized for potential supply chain relief increased by about 48,000 jobs last month. The construction industry added 60,000 jobs in February after an otherwise anemic January. And you guys can see leisure hospitality, as we do know, things are opening up. Pandemic is pretty much going away. So, you're seeing a lot of job hiring, and that is definitely a good thing for the markets. And, for a while there, when you would see good job numbers, that was seen as a negative catalyst because it was like, hey, the Fed is going to have to raise rates faster if people are flooding back and getting jobs, right? But I don't really think that's the case now because people already know that we're going to see rate hikes. So I think actually jobs coming in good like they did today should be a bullish catalyst. But really, what is going on today and what is causing this sell-off? And by the end of the day, if you're watching this after the markets are closed, these numbers could be way different. But what is causing this over 1% drop on the NASDAQ and the S&P and the Russell 2000, almost 2%? It is because of the nuclear power plant in Ukraine, all of the fighting that is going on with that. The concerns of what that could cause. There are some experts saying that could be 10 times the size of Chernobyl. You go from a conflict involving Russia and Ukraine, potentially involving all of Europe. And that's a lot of, concerns there as well of, hey, what's going to happen if that does melt down Is that going to push NATO to get into it? Is that going to push other countries to get into it? So that's a real concern, and that's what the markets are freaking out about. On a bullish note, it says Russian envoy says Iran nuclear deal could come next week, and that would be good for oil. That would be good to get inflation down because oil is a main component of the CPI reading. So anything involving the Iran nuclear deal is going to be seen as a bullish thing, as it will bring down inflation. There is also some interesting talks about some of the internet providers trying to cut off internet to Russia. And I think the markets did bounce off of that as well, because if you shut down internet to Russia, you're going to get a lot of backlash to end this war. And I think that people would really start to revolt over it more than they are right now. So the markets did take that as a little bit of a positive. And then you have this news piece right here. It says Russian economy in shambles. And that's obviously the case. Some stocks like Luke Oil, Superbank, the largest bank in Russia, as well as the largest oil producer in Russia, down over 99.7%. All time. So they are at like 1 penny a piece. You can't even hardly pay people to buy those stocks. So pretty interesting right there. Just keep all of that in mind. It's going to develop over the weekend, but mostly I do want to see what happens by the end of trading today. If you do see people buying stocks heading into the weekend, or if you see them dump out of stocks heading into the weekend. It looks like it could go either way right now, but you are getting that bullish tint to the markets ever since we did get some of those headlines that I just went over. So pretty interesting right there. We're gonna have to see what happens by the end of the day. But as far as the interesting flow sentiment, like I said, 100% positive order value, one order totaling 263.91 thousand. And take a look at some of these orders that are coming through. A $16 call expiring March 18th for $129,000. Another March 11th expiration, $25 call expiring like I said, March 11th for $36,000. So somebody put $36,000 betting that AMC will hit $25 by next week. That would be a wild move. The only way, in my personal opinion, that's $25 is going to happen is if there is a ceasefire or if we see really good news for AMC. But I do think we are going to rally next week. I think we've seen a lot of pain that is really unjustified given AMC's earnings. And AMC typically does rally after earnings. And I know I might get a lot of hate for that, but typically AMC does. Right here they did, right here they did, right here they did, but right here they did not. The last earnings in November, they actually fell. And if you take a look at the day after earnings, like I've went over a couple times now, some days are super red the day after earnings. Like right here, August 2021, we were actually down 6% the day after earnings. But what happened? We went from about $27 all the way up to $54 per share in the following weeks. So I do think these positive announcements from AMC's earnings, the positive EBITDA, everything else that came out will have an effect on the stock, but I think it's going to take a little bit of time because you do see just a lot of fear in the markets. One day it's something, another day it's something else. There's endless amounts of catalyst, it seems like right now, for people to be fearful about, whether it's Russia, Ukraine, whether it's the Fed, inflation, or anything else. People are just quick to sell stocks, and the mentality on Wall Street right now is sell the rip, do not buy the dip. So that's exactly what you see going on. But, unfortunately for the short sellers, it's not going to matter once the price goes up. Some of those guys that are caught with their pants down and they don't have enough money to service those margin calls will turn into forced share liquidation. So pretty interesting right there. Keep all of that in mind. As far as the short interest, you are looking at 20.92% short interest of free float, 107.73 million shares that are sold short, cost to borrow max of 2.32 32%, and the utilization is 100%. I'm surprised the cost to borrow max is not going up more, and the utilization is just staying the same, because it's obvious that hedge funds, they're obviously not lending out their stock for 2.32%. So I want to see the cost to borrow max going up, and then I want to see at what level does the utilization start to go down. In other words, what interest rate do long investors in AMC need to get to lend out their stock to short sellers? Obviously, nobody is budging right now, so that is looking very positive. Days to cover is at 2.5, so it is also hard for shorts to get out of their short positions still. As far as the max pain for today, that was 11, or this is actually SoFi. Let's pull up AMC. Let's pull up AMC. Max pain is $18 per share by today, which it looks like, yeah, we're not even close to that. Next week is $18.50. So that is certainly possible, in my opinion. If we take a look at the technical analysis, that's the level that we really see a lot of resistance at, about $18.50. If we can break out above $18.50, possibly on Monday, or even see a nice rebound by the end of the day today, then I think we could be clear to go to $21 to $23 per share. I think you'll see a lot of resistance around 23 as well, but to see a move to 23 next week would not surprise me. The RSI is signaling we are a little bit on the oversold side at 43.29. The MACD is slightly bullish still. It wants to go bearish, but it has been holding bullish for a while now, which is still a good sign. The 20-day moving average is at 1774, and we are below that, so hopefully we can close above that. If not, it's still decent. We're still at this next level at $17 per share that I have had drawn out here for a while now. So that's basically the scoop of what is going on as far as the volume is concerned. Another very low volume day so far at almost 24 million shares that have been traded for the day. Now let's switch gears. That's what you guys need to know as far as AMC is concerned. I do think a rally is still coming. As far as Mullen Automotives is concerned, this is a very interesting stock. I bought my shares at 70 cents. I was up over 100% on this stock. I bought it, I believe, in this range. I believe on this day I actually bought it. A couple days later, was that over the weekend, I believe? It went crazy that next trading day. As far as this is concerned, I really don't think Mullen is necessarily a short squeeze trade. Things have developed a lot, but when I bought my position, there was only 2% short interest on this stock. Only 2%. Now, you do see 18.7% short interest, so it could develop into a short squeeze trade. But the way that I would look at this is that, hey, the market cap is like $30 million. For an EV company, that is very, very low. So the way that I look at this, and the way that I did look at this, buying stock at 70 cents, was either this thing goes to $10 per share and goes to a couple $100 million market cap, or it goes to zero because the stock was dumping from 13 down to 50 cents. It looked like there was something that was going wrong with the business or something. I did some due diligence. It didn't look like that. The company even came out and said, hey, we don't know why the share price is falling. It has nothing to do with our business. But the way that I really look at this is like a long-term option. You buy some, you hold it, let it sit, and let it do its thing. You don't try to give yourself a time frame, get in, get out, get in, get out. At a $30 million market cap, that is very, very cheap. I'm sure their factory alone, which they do own outright, no debt on the factory, is at least $10 to $20 million factory. So you're basically getting the car business for free, and they are starting deliveries in Q2 of their carrier fleet. I'm not sure exactly what it is. Doesn't even matter. The valuation here looks very attractive. Fun fact, if Mullen Automotive goes to $1 billion market cap, $1 billion market cap, you would make a 50x from here. So I don't care how long it takes. If it takes 1 to 3 years, don't even matter, because my $350 investment would turn into $22,000 if that were to happen, if there was no dilution. So that's the way that I look at it. I wouldn't give yourself a time frame on this. I think it makes sense on a risk to reward basis, but I would also go into it like, hey, there's a possibility I lose all of this money, so I'm not going to put a ton of money. I'm not going to YOLO my portfolio into this. Too much emotions involved with that typically as well. So that's my thoughts on this. Let me know what your thoughts are on this down below in the comment section. Would love to hear from you guys. Thank you for watching. Check out the links down below in the description of this video, as well as in the pinned comment down below to join the trading community. We would love to have you over there. And like I said, make sure to get yourself some free money. You also help to support the channel, and I do greatly appreciate it. So thank you guys for watching, and I will see you in the next one.